I do love a deal.
I can tell. This is my next question.
I really enjoy it. It's the adrenaline. It's the feeling of getting something, particularly when it's off market. It's the personal achievement, I think, that you feel from bagging something which is kind of bang on strategy, and you've kind of taken it from under the nose of some of your competitors. Maybe it's that competitive edge. I'm excited. I think obviously there are discounted values at the moment. We've seen a valuation fall, everyone's seen a valuation fall. But I think if you believe that London offices are going to recover, then this is a fantastic moment to buy. When I was younger, I definitely didn't know that many women in central London investment. I'm not sure I knew any. And that's not because they didn't exist, it's just because I didn't know who they were, because there wasn't a focused network for it.
As some of you may know, the People Property Place podcast is my side gig. It's a creative outlet to share the stories, views, opinions, and career journeys of the movers, shakers, innovators, and leaders in the real estate space. Day to day, I am the founder and managing director of Rockborn, which the podcast is powered by. As a business, Rockborn focuses on leadership and future leadership search for real estate owners, investors, developers, and funds. As we draw to a close of 2023, lots of our clients are considering their human capital needs for next year and beyond. So, if you work at one of those businesses and you're looking to add top talent to the team next year and want to get ahead of the curve, feel free to drop me a message. I'd love to meet with you, discuss how we could maybe support you with that assignment or give you some pointers to do it yourself. But over to the podcast now. So today we are joined by Alexa Baden Powell, Senior Investment Manager at GPE. GPE is a FTSE 250 listed central London investor and developer. At the time of recording, Alexa has been with the business for just over 6 years, and day to day, she's responsible for the entire cycle of deal origination, underwriting, due diligence, and transaction execution. Prior to GPE, she worked at AXA Investment Managers as a senior transaction manager and started her property career at BNP Paribas. Alexa is also the co-founder of WIN, the Women's Investment Network, which she set up just over a year ago with her friend Ella Johnson. Alexa, welcome to the podcast.
Thanks for having me.
Not at all. Well, look, I'm really intrigued to get stuck into your background, career, your role at GP and how you're seeing the market at the moment and where the opportunities are. But before we go there and get into that, a place I always like to start these conversations is how did you get into real estate? Because you're a linguist. Well, you certainly studied that at university.
I did. I would say I've actually always been interested in real estate. I grew up in London. I've always been interested in architecture. I was one of those really sad kids who actually looked in estate agents' windows, and was interested in it. And my parents had a construction company in Portugal, and they did sort of residential development over there. So I spent a lot of my childhood running around sites in Portugal. Literally just houses, but I kind of loved it. I looked at all those architectural models, the ones with the tiny little trees and little cars, and I just thought, this looks fun. This looks like something I want to do. So you're right, it is definitely not my background. I did history and French at UCL, I think because I was really interested. I liked academia in general, and I wasn't interested in doing a purely practical degree. Also, I wanted to year abroad in Paris, so loved that. That was great. And you couldn't do that with real estate. I did non-cog to start with, but then I did various internships along the way, sort of during my undergraduate, and then I switched to LSE for my master's, and then I did a RICS accredited course, and again did some more internships, and I just knew this is what I want to do.
And during those internships, did you try out different parts of the property world, or did you have a an idea at that stage of which part or which route you wanted to progress your career in?
I actually had no idea which part I wanted to progress my career in. I just knew that I liked architecture and I liked buildings in general. I don't think I could have told you what investment was at that point at all. I just didn't really know much about it. So I did an internship at Resolution in London, which was really interesting and gave me an idea of sort of pan-European fund management and asset management, and that was pretty eye-opening. I did an internship in New York, which was also good, and that was more property management and asset management, and it was offices kind of around the greater New York area, so not Manhattan. And then I did one in Portugal on the residential side, residential development. So I did a whole range, and I definitely didn't make up my mind about what I wanted to do. Even commercial versus residential, I was undecided, and I just thought I'd, hopefully get into a grad scheme and narrow it down from there. And
so you went to LSE, where you did regional and urban planning studies. Did you do that full time, or did you dovetail it with an APC or?
No, I did it full time. Again, I still wasn't sure what I wanted to do, and I wouldn't say I was quite ready to start the world of work. So I wanted another year of pure uni. So no, it was just by itself.
And then, having done that course, did that cement or did that give you an idea of which direction you wanted to go, or is it still a relatively open book, and landing on an APC at one of the big firms you thought could kind of open your chances? Or
I think it was definitely, I wanted to do my APC. I wanted a broad starting point, and I wanted quite a traditional route. That course is much more academic than practical. We did a lot of microeconomics, a lot of the economics around urban planning. I wouldn't say I had a clue how to value a building after it, but it was interesting, and I think it was more interesting in an academic sense rather than practical. So that was also why I wanted to do an APC, just to get a really practical, broad brush starting point. And I would say that when I started my APC, I felt at least a year behind all the other grads who'd had a more practical degree.
So you landed at BNP Paribas?
Yes.
What was your first rotation, and what did you achieve there?
My first rotation was fund management there, which I think they gave me because I spoke French, and because it was obviously a French bank, and we had a lot of French clients. I really, really loved it, actually. I can't say I knew what I was doing at all at the beginning. Obviously, fund management requires a pretty broad understanding of property, which I totally lacked at that point. But I loved it. And I thought, okay, it was interesting starting at an agency, but being on the client side almost at the very beginning. And we were in our own separate box. It was sort of Chinese wall between us and the rest of the company.
So it was BNP Paribas investment management arm that you were.
It was BNP. Well, I joined BNP Paribas Real Estate, but this was BNP Paribas Ream. And it was sort of separate. But I loved it. And then after that, I was in corporate real estate for a while, which is where I learned how to do Excel, good skill set. And then I did development consulting, so sort of land agency, really, which I loved. And then valuation, which I also really enjoyed, controversially, I know.
So you touched on corporate real estate, where you learned Excel. For someone who doesn't know what corporate real estate is, can you just paint a little bit of a picture, and then what do you mean by learn to Excel as well?
Oh, well, what we were doing is we were largely working on the occupier advisory side. So we were working with clients who had big property portfolios, usually leased, and a lot of the buildings they wanted to hand back. We were looking at how efficiently were they occupying their space, and particularly where they wanted to hand buildings back, what kind of a surrender payment, as an example, would they need to pay? So it was a lot of analysis, I'd say, around their existing liabilities and how they could minimize those and also maximize the benefits that they got from their occupation.
And these kind of clients that you would have worked on, the likes of a GlaxoSmithKline or a Vodafone,
that kind of
big
thing, yes.
International conglomerates where they've got massive portfolios and big liabilities, or need to make strategic decisions on what they occupy moving forward. Yeah, exactly that. And sort of more locally, it was people like Royal Mail, who obviously, we all love real estate. We all care about real estate, but it's where
the real estate isn't actually the fundamental business, but it is key to supporting that business. So we're trying to consult and help them figure out how to improve their portfolios, I suppose.
And then you moved into, say, land agency?
Yes.
So what's land agency, for someone who doesn't know that?
Well, the team was called Development Consulting, I think, at the time. And we were, I think most of our clients were public bodies. So we did a lot of work with, say, NHS England, as an example, and TfL. And we would basically look at surplus real estate for them, and we would work up development appraisals, tell them what we thought the best alternate use was for their land, and sell. So things I was working on at the time, worked on hospital sites, sort of excess space down in Wimbledon, as an example, which I think we sold to Berkeley Homes in the end. I sold a library in Limehouse, which was, it was just out of use. It was no longer fit for purpose. The building was totally knackered, and there was no longer a need for a library in that area. So again, it was trying to think, what on earth do you do with a library in Limehouse, which is no longer being used, and who do you sell it to, and finding that buyer.
Amazing. It's amazing, like the different opportunities and avenues you can kind of take, or the projects you can kind of work on at a very entry level stage in one's career, and have quite a lot of responsibility for it as well. You did valuation, and then you completed your APC. Yes. Once you completed your APC, did you have a better idea of the real estate world and which direction you wanted to take your career, or were you still tossed, had different opportunities, or your head was turned based on what you'd done in the previous 4 rotations? I
think of the rotations that I enjoyed the most, it was a combination of the fund management side and development agency. I'd always been interested in the investment side, but I hadn't managed to get a seat there. And because I'd been in Ream, I thought, look, this is all very interesting. I like the transactional side. I like the investment side, the kind of I suppose, full picture of a transaction. But I wanted to go client side, and I knew that at that time. So I knew that I didn't want to stay agency forever, and I thought that my APC was kind of a natural point to leave it.
So after a period at BNP, you moved to Deloitte, right?
Yes.
So how did that come about, and why did you make the move to Deloitte?
Really, because I had friends there at the time, and because I still wanted to get a bit sort of broaden my knowledge and move client side. But it's quite hard to move client side immediately post APC, because you still don't really know much. You're still very early in your career. And I had friends there who basically said, look, there's this team, and it's sort of the wider corporate real estate piece. You also do some debt. You'll get a better understanding of the corporate finance side. And a lot of us get poached to go client side. So I'm afraid it was an entirely strategic move to both broaden my knowledge and also in the hope of getting poached to go client side, which is what I did.
Yeah, it's definitely not uncommon. I think quite a lot of other people do that, line up roles for a relatively short period of time to acquire skills in their early 20s or what have you, to then make them a little bit more employable, or make that move over to the principal side, because that's often quite challenging, or it can be challenging.
Well, just to differentiate yourself, because there are so many grads who do the agency side, and it's really hard to say that you're different. And other than speaking French, I really wasn't that different from anyone else.
So you were at Deloitte for a couple of years, and then you landed at AXA. Can you talk to me about that move? How did it come about, and why did you move to AXA?
I'd say AXA at that point was probably the dream job for me, because I really wanted to move to the investment side. I'd done a bit more consulting at Deloitte, and a bit more sort of on the investment side as well. But I just hadn't managed to figure out how to make that move. And I got contacted by a recruiter, actually, who I'm pretty sure that he did a LinkedIn search of someone who had development experience, corporate finance experience, valuation, and who spoke French. And that's how they found me. And then I came in for interviews. So I really didn't know anyone there at all, which is rare in real estate. I don't think that's how you make most of your moves. And then I just really got on well with them. I loved the team, had a few rounds, and that was that. So
for someone who hasn't heard of AXA, who are AXA, and what was the team and the role that you went into?
Well, I mean, it's an enormous French insurance company, really insurance and pension funds. And I was working at AXA Real Estate Investment Managers, or what was it called? AXA Real Assets, I think, at the time, which is basically the real estate investment arm of the pension company. So we had lots of separate clients. We had AXA money, of course, but we also had different clients from the US, from the Far East, from Europe, and it was a combination of our own balance sheet capital and separate accounts. And the team that I went into was just the transactions team. So we did all sales and all new acquisitions for all of the different funds if they wanted to buy anything in the UK. And it was all assets as well, all asset classes, sorry. So it was logistics, hotels, build to rent, offices, retail, the lot. I think I was more focused on London, probably because I'm London born and bred, and I knew that market best. But it was, 80% UK, probably spent 20% of the time looking in Ireland. But I didn't do anything pan-European when I was there.
So it was for AXA balance sheet capital, so the money that they had themselves that they wanted to invest, but also separate accounts,
yes,
i.e. other clients that they had raised and had a mandate to go and invest on behalf of, either in a single fund basis or on a commingled basis?
Yes, exactly. We had lots of different funds. Like we were investing at the time for the AXA Core Fund, which grouped together AXA money and also other investors' money in one set fund. So at that point, I was always pitching to different fund managers because your job was to know all of their different requirements and then look out in the market and basically decide which fund it might sit best with and then pitch it.
Got it. Makes complete sense. And your role, were you an analyst when you joined or were you an investment manager? And how was the team structured?
I was trying to think. I think I joined as an associate in the transactions team. So I wasn't an analyst. We had a whole pool of analysts. There were 8 of them, I think, typically, and they worked with us and all of the different fund managers as well, and our development team. So lots of them, and actually quite a lot of work. So we needed a lot of them. But no, I worked with 2 people in particular, Hugh Stevens and Martin Parrott, and it was the 3 of us in our transactions team. And they were great, actually. I loved working with both of them. They're both really good fun, and I learned a lot from both of them.
So your role, you would go out and you'd talk to agents.
Pretty much.
And you would go and try and originate opportunities that fitted the criteria, return profile, lot size, etc., of the various different accounts or internal structures that you had. You would then pass those brochures or maybe originated deals to your analysts who would underwrite them and do some analysis just to see if it stacked. And then you would progress those opportunities through the fund manager to IC and manage the process. Is that right? Yeah,
exactly right, actually. Exactly what you just said. I said it probably better than I could. That was it. And it was also at that stage, I was still very much building my network. So it was also looking at stuff that either Martin or Hugh had sourced, and again, being the bridge between them and the analyst and making sure things were looked at correctly. And often I would be processing the deals, actually doing the DD and helping with the transaction execution, even if it was something that they had sourced as well, because I was very much still learning.
And in terms of the asset classes that you looked at, was it at that stage, was it mainly office, industrial, logistics, or was there some operational or alternative asset classes that you were looking at as well?
We were largely looking at offices. I would say at the time we built... we had just built 6 Bevis Marks, which we sold while I was there. We had completed our business plan at 20 Gresham Street. We sold that as well while I was there. We were buying a few as well. We bought the Asticus building, Victoria Warwick building in Kensington. We bought a couple of hotels as well, so that was operational. In Gracechurch Street and Ludgate Circus, the Club Quarters Hotel. So that was a management agreement. So that was definitely operational. We also dipped our toe into healthcare as well. So we bought the Retirement Villages group while I was there. But we did have a specialist healthcare team, a guy called Andrew Ovey, who was very much managing that. So we looked at the real estate side, but he was the brains when it came to the operational bit. Or at least I speak for myself. Maybe Martin Hugh understood more of it than I did, but he understood it far better than I did.
So you were at AXA for a couple of years.
Yeah.
What prompted you to leave, and why did you leave, and what was your thought process at that time?
I mean, I say I loved AXA. I had great experience there, and I probably would have carried on there for a very long time. I was perfectly happy to stay there and build my career there. But post-Brexit, I'd say the mood changed somewhat, working for a big French pension fund whilst you are voting to leave the EU wasn't the best atmosphere. And even though I very much voted to stay, it wasn't great. And they were basically concerned, and they were saying that they're going to do a lot less UK work. I remember the phrase, when do you catch a falling knife, in the investment committee when we were trying to buy some assets in London. And it just, for someone who wanted to do a lot of transactions, it wasn't the best atmosphere. And I still think I would have seen it out and I would have carried on. But I actually got approached at that time by GPE and kind of came through a mutual agent friend. I'd actually had a call from a recruiter, but I totally ignored them at the beginning because I was really happy at AXA. But then an agent who I knew really well said, look, you should meet them. They've told me they're looking for someone. I suggested you. They told me they'd already got in contact with you, but you hadn't sort of spoken to them. Why don't you just meet them for a coffee, see how it goes? They're definitely interested in London, which is what you want to do. So kind of can't hurt. So I did, and then I was really sold very quickly. So I think it was the appeal of a central London focus, just understanding what it was like to work in a REIT, that PLC life. And it's a relatively small company in terms of the number of people, but it's got a great reputation in the market. So all of that was pretty attractive. I spoke to my boss about it at the time, Hugh, and he was saying, look, if I was 29 and I was given an opportunity to work at GPE, I'd take it, actually.
Or Great Portland Estates, as it was before,
yes,
before it was rebranded to
yes.
GPE in 2021. So what was the role that you were going into at GPE? What was the remit? What was your focus? And what were you responsible for delivering?
Investment manager. So pretty, very similar to now, just really deal sourcing. So really understanding the market, finding deals and underwriting and executing where appropriate. We at the time when I moved, actually, we weren't really looking to buy much, but it was always scouring the market, making sure that if there were deals that, even if we didn't want to buy them, we wanted to know why, actually, to make sure we weren't missing out on any opportunities. Also advising on sales. We were selling quite a lot over those years. We're selling things like 55 Wells Street and 30 Broadwick Street. So I did those in the way of transactions, but it was mainly on the acquisition side.
Can you just give me a bit of an overview of the portfolio at that particular time, like the AUM or the types of assets that the business held and were looking to acquire as well?
Yeah, at the time, I think I'll probably get the figure wrong, but I think we probably had about 2.5 billion under management, probably slightly more. This is back in 2017. And our portfolio is made up almost entirely of central London properties. So we are predominantly office. Again, I think back then, maybe we were 25% retail, now close to 20%. And we develop best-in-class sustainable spaces for London. And at the moment, and as at the time, we're just always reviewing our approach to make sure that we're meeting our customers' needs and our investor needs. At the time, we had one main strategy, which was HQ redevelopment. So that, if you look at our portfolio, those would be assets like our Hanover Square redevelopment, which is anchored by KKR. We'd just delivered Rathbone Square, which is anchored by Facebook at the time, Meta now. And we'd done the...
Done in Soho?
Done in Soho. Oh, that's now. No, that's today. We've done a few developments in Oxford Street as well, which we sold to Norges 73 to 89. That's the address that I had forgotten. So that was HQ redevelopment, basically taking older, tired buildings and repositioning them into best-in-class spaces for the customers of tomorrow. That was the idea. And we did it very well, and we'd done it for a number of years. Since I've been there, it's evolved, and while we still very much have that strategy, and we're buying for it, Soho Square you just mentioned, we have another strategy which we call fully managed, which is what we term our flexible office space. So that has evolved over the last 5 years or so. And that is looking for smaller buildings. When I'm looking for it, it's smaller occupiers And it's very distinct from your usual co-working or serviced offices. You have your own floor or half a floor. You have your own front door, and everything is fully fitted and fully managed by GPE. So we provide the space and we provide the service, and we make it totally hassle-free for you. And that was an idea that I don't think we'd had when I first joined, which was 2017.
That's what it says here. So it's evolved from just doing HQ best-in-class sustainable development, where you'd lease these floor plates for 5, 10, 15 years, whatever the term might be. And then the tenant was responsible for fitting it out.
Exactly.
To being more kind of smaller, more granular floor plates, still design and creative led, but it being more of a fitted or a managed solution where a tenant would literally just turn up.
Yes.
And Wi-Fi was working. There was milk in the fridge. Is it?
No, it's literally that granular. Yeah, your Wi-Fi will be working. You will have amazing coffee, and your milk will be in the fridge, and we'll give you the oat milk as well. Everything is done for you. We do pastries and everything, and people love it. And actually, I think our first building, which we developed just for this purpose, was Dufour's Place. And I don't know if you've ever been, but I strongly recommend it. It's the kind of building that you would want to work in, that everyone would want to work in. You're greeted by our customer experience manager, and she knows all of our customers by name. She is there. It's a lovely reception entrance experience. We have a coffee bar area. We've got lots of soft seating. We've got informal meeting rooms, telephone booths, a lovely terrace. It's somewhere you'd really want to dwell, basically. And that's the kind of experience we try to give for fully managed.
And do you have a particular occupier in mind for that? Or...
No, honestly, we have a whole range of different suites, and it depends on the submarket. We have we have buildings down in London Bridge, our Wool Yard campus on Bermondsey Street, and those units range from pretty small, sort of sub 1,000 square feet, to maybe 4,500 square feet. And obviously the occupier would vary quite significantly if you're taking less than 1,000 square feet up to that 4.5K floor plate. And we also have buildings in Soho, which again would attract a different type of customer. I think one of the things that we have done best, and which we've done recently, is attract the customers in the first place, keep them there, so we retain them, and also convert some of our traditional ready-to-fit or Cat A customers into fully managed customers. So we have moved people between buildings where the requirements have changed and said, actually, we know you don't want another 20-year lease, but how about you take this smaller space? Everything will be really easy for you. You're staying within our portfolio. They already trust us as an owner. So that relationship just continues on a different basis. So I don't think it's really not one size fits all. We're not looking for a particular type of customer. We adapt to you.
So how has your role as an investment manager changed? Is it the type of assets that you look for? Is it the relationships with agents? Can you just talk to me about how do you nail down the criteria of what it is you're looking for from an investment perspective?
Well, I think, yes, it has changed. It definitely has changed. For the first, I think, probably 3 years, we were almost exclusively looking for HQ offices, offices that we could turn into best-in-class sustainable spaces for those customers who want to take 15, 20-year leases. Now, clearly, the criteria has changed, and I both still look for that, but I also look for smaller buildings. They're typically anywhere between 20 and 60,000 square feet with floor plates, which are either 5K or able to be split into smaller than 5K units, because we don't think there's that much of a depth of demand over, say, 5K at the moment. And also in different types of submarkets. So I think where we think the customer demand is strongest is places like all of the core West End, actually, still, but also Spitalfields, Farringdon and London Bridge. So those are the hottest flex submarkets that we are still really looking for. Whereas HQ has always been a little bit different to that. So it's talking to different types of agents. It's really making sure that that message is out there, that people know that GPE is not just what it always has been, that we do have this strategy. And our agents are reasonably well informed. Certainly now they are. It was a bit of a learning process at first, but I think they've seen what we've done in our own portfolio and now they get it. So it's just making sure that that message is out there, that you are still on the hunt for these two strategies and that the buildings are pretty different. I think the central thing that brings them together is that we only want to buy in strong, areas of very, very strong customer and investor demand, and also where we think we can create best-in-class spaces, whether that's for a fully managed customer or ready to fit.
Your role as an investment manager or senior investment manager has got lots of different parts to it. Can you just break down those different parts and from deal origination to underwriting to the due diligence and then the transaction execution? Because some of them are foreign words or jargon to people who might not know. Can you just break down the different parts and how they fit together?
Yeah, sure. I mean, I think deal sourcing is a combination of really, really knowing your strategy. So knowing what you're looking for, obviously, is key. Networking, I think, is really critical. You have to know everyone in the market and have very strong relationships with them, whether those are agents or whether those are other clients. So I will know all of my peers at different REITs, different pension funds, propcos, so that you can share ideas with each other. And often your deal sourcing will come through those conversations as opposed to via agents. So I think it's about being out there, getting your message across, and bringing in the ideas. So that is on the deal sourcing side. And then underwriting, it is, again, knowing your market, knowing if an agent tells you that building should be capped at 4.5% yield, you need to know why not, especially today where that's rare. So you need to know you had to know your own portfolio very well, I'd say. I mean, I underwrite with the help of all of our internal teams. So we have a project management team who really help me on the cost side and also how long things are going to take. We've got a development team who are experts in planning and getting buildings through that whole process. Our leasing team, obviously a leasing space day to day, they know best about what rent we're going to get in those buildings better than me. And our portfolio management team, again, can advise on how realistic a business plan is going to be. So it's bringing in all of that internal knowledge and applying it to a spreadsheet effectively to figuring out whether or not something is going to work. And then at that point, it's okay, if this does work for us, it's a bid process sometimes if it's on market. Otherwise, it's getting a little bit closer to the agent who represents that investor or to the investor themselves. Sometimes, I've made off-market bids out of the blue almost before, which sometimes work. And other times it's about calling up your friend on the other side and saying, look, where do I need to be on the bid process? So at that point, that's when you get it under offer. And then the DD process starts. So you have a whole set of assumptions which you used in your underwrite, and it's validating those. It's testing them, really thinking, okay, now I know a little bit more about this building. I've done my building survey. Are my costs accurate? Do I need to rethink actually, and how that filters in to pricing or whether you still want to do the deal? Hopefully we always certainly try to do a lot of DD upfront, so we're not in that position where we have something under offer and we want to back out. But clearly, a lot of it happens after you're already under offer because some information you won't get. You don't get unfettered access to a building typically before you have bid. So that is, it's validating all your assumptions and asking a lot of questions of your lawyers and also of the other side and figuring it all out. And execution, really that's the legals. And I really enjoy that bit. I like the negotiation. I like the bit where something unexpected comes up and it's the creativity. It's how do I deal with this? When the shape of the deal changes halfway through and you need to figure out a way forward. We had that on one of our deals that we did recently on Soho Square, and it was constantly evolving because of various things that were going on at the time. And it's the skill in managing that and making sure that the deal doesn't drop.
Are you involved with structuring, debt financing, or any of the kind of the complex warehousing where the deal will be?
Not much. We have a corporate finance team who are specialists in that. I should have mentioned them actually when it came to internal resourcing when it comes to the underwrite. So they deal with all the debt. I used to get involved with it a bit more at AXA because we used to leverage every deal individually, whereas at GPE, our leverage is at a corporate level. So it's unsecured. Almost all of our debt is unsecured. So we have an RCF, which we can draw down capital from. It's about 500 million at the moment. So that means that I will always have cash for the deal that I'm looking at, and the financing comes afterwards.
So what does an RCF mean?
It's a revolving credit facility. It is, I suppose, akin to an overdraft, with a bank. Like, this is all the money that the banks, that our relationship banks kind of have put together for us, and we are paying a rate on it. And we can draw down on it within 24 hours. So clearly some of that cash is already allocated. For example, we're on site at 2 Aldermanbury Square in the city at the moment, the building that we've pre-let to Clifford Chance. And some of that cash will go into that development. But there's other unallocated cash which can come to me if I find something good.
If you find something good, then you can transact in a really quick way.
Exactly.
What happens once you've bought the deal?
When we bought the deal, well, this is evolving. I mean, I try to travel with deals a bit longer because at least at the beginning, you have maximum knowledge of that deal. I mean, you're the one who has overseen the whole transaction. So you should know it best. If you don't, you haven't been doing your job very well, I'd say. But we have a handover process. And again, I try to involve everyone in a transaction whilst it's going on. So hopefully it's not a surprise to the people who have to take it over. But you should still travel with it a little bit afterwards. So, for example, with Soho Square, our development team were involved, our project management team were involved, our customer experience team were involved, portfolio managers. We were all meeting twice every week during that deal, just to kind of update on issues, make sure everyone knew what was going on because it was a complex transaction. Ditto our corporate finance team, actually, they were very involved. And then afterwards, we had a series of initial kickoff meetings to make sure that everyone knew what they were doing. But now it's within the hands of those teams. So, I mean, it'll be led from the development management side because that is a development. But some of our other assets, if we've bought as more of a standing investment, which will roll into a fully managed business plan, that might go straight into our portfolio management team. So I'm no longer the owner of the asset, if you know what I mean, after it's been bought, but it is very much your responsibility to travel with it and make sure that your business plan is being carried out. And also, I think it's important to check and, if things haven't gone the way you planned, if your business plan isn't being carried out and it's because things have been missed during DD or whether costs have gone up or whatever, it's good to know about that so that next time you are aware when you're underwriting. It's just a lessons learned thing.
So you pass it over to the development team to deliver it, or an asset management team who will be responsible for repositioning it, leasing it. Do you get back involved with the disposition or the disposal of assets, or is that left to, because some firms do that, and others, the disposition parties, the asset or the portfolio managers are responsible for that?
I probably would do if we were doing that, but actually all the assets that I have bought whilst being at GPE, we have still got, and none of them are imminent disposals. So at the moment, no, not yet, but I would expect to be. A lot of our portfolio managers are often responsible for sales. It does depend. Our director of investment management, Hugh Morgan, he's really responsible for all of the sales and he will oversee everything. And I get involved in some of the larger transactions, but often on some of the other ones, the portfolio managers run them themselves, overseen by Hugh. So it does vary, I'd say.
What would you say are the attributes that make a good investment manager? Like, what do you have to have or be able to do to become or be a good investment manager?
Oh, that's a good question. I think you have to love a deal. I would say that I do love a deal.
I can tell. That's my next question.
I really enjoy it. It's the adrenaline. It's the feeling of getting something, particularly when it's off market. It's the personal achievement, I think, that you feel from bagging something which is kind of bang on strategy, and you've kind of taken it from under the nose of some of your competitors. Maybe it's that competitive edge. I think that helps actually to have a little bit of a competitive edge and to enjoy a transaction. And also, if you don't love it, you are not going to work all hours on it. And sometimes you have to. It depends on the deal. It's not always that way, but everything else in your life does have to drop a little bit whilst you are in a deal, particularly if it's a short timeline. Otherwise, it's a competitive market out there. This is central London, otherwise there are other people who will transact faster than you. So I think you definitely have to really enjoy it anyway. But I think also diligence is pretty key. I think you have to be a pretty detailed person to be really good at it because there's always something new on every deal I do. There's always something that I've never seen before and, which might trip you up. And you just have to always be asking questions and actually wanting to find out the answer. Even if it's something you really don't want to hear, it's much better to be asking those questions up front than finding them out once you've already bought the asset. I also think you have to be collaborative. You've got to be reasonably humble. I think, like I said before, if my project management team tell me, look, this is what it's going to cost, I can challenge them on it. It's definitely my job to challenge them on it, to make sure that there isn't sort of excess fat baked in there, which would allow me to pay a keener price, which we don't need. But, ultimately they are the experts in that area. If they can tell me, look, we're on site with 3 different schemes, which are quite similar to this, and these are the costs, then frankly, I've got to take that. So it's being able to absorb other people's expertise and put that into your underwrite. I also think that's pretty key. And then lastly, just relationships, I think you have to be reasonably extroverted, or at least it certainly helps because a lot of the deals are very personal, and you'll be dealing with the other side all the time. It's being able to be in their face all the time without deeply irritating them, enough to throw you out. And also just finding the deals to start with, that comes from your network. Like I said at the beginning, whether it's agents or other clients, that is key. So you have to be a reasonably networky type of person.
As we've touched on, you clearly absolutely love it.
Yeah, I do.
I can literally just pick up on the energy. It's palpable. Have you ever considered not doing transactions? Has there ever been a case where you think actually it's too intense? It can be all time consuming. It's challenging to kind of balance personal life, work life, and everything else. And actually, a kind of a route to asset management or development or another avenue is more appealing.
These days, no, I love it. And long term, you want to get to a place where, you're managing a wider team. And I know that at that point, probably you have to let go a little bit of the day-to-day running of transactions. But I'm not there yet. I love it too much. I would not want to let it go at this point. You're right. It is difficult to balance. And that's why I said, you've got to love it. If you don't love it, then it's probably not for you. I'm interested in all the other areas. But what I like about transactions is that, I get to play with the development side. I get to understand quite a lot of it and apply it to what I'm looking at. But I think you have to be a very detailed person and a patient person. I wouldn't say I'm necessarily that patient to see a project through from the very beginning all the way through to planning permission and then actually delivering the thing. That takes years. I'm not sure I have that attention span, and our development team need that. Before I was in transactions, I definitely looked at other areas, but as soon as I started really specializing in this, I just really enjoyed it. So I haven't really looked back.
There's a lot of noise in the press at the moment in terms of wider investment volumes, but also offices and the future of the office space.
Yes.
How do you and how do GPE see that, and how do you navigate some of the industry and the structural challenges that are presenting themselves?
I think you hear a lot about this, structural challenge of the office. Is this office's moment, like the retail moment of a few years ago, working from home and all the challenges with that? But I think it's overblown. I think the best offices will absolutely succeed. And we're seeing that there's a massive bifurcation between the best and the rest. And I think what we are developing at GPE and also what we're buying is going to be the best. So I'm not worried. And I think that this is the type of moment in the market where we're really seeing a return of the market cycle. I don't think there's been an opportunity like this since 2009, 2010. So I'm excited. I think Obviously, there are discounted values at the moment. We've seen a valuation fall, everyone's seen a valuation fall. But I think if you believe that London offices are going to recover, then this is a fantastic moment to buy. We are seeing significant discounts in the market at the moment. I mean, some of these buildings are trading at a discount to replacement cost. So you literally can't build some of these buildings that are being sold for the amount that they're being sold for. So I think that shows you that it's a good time to buy. And our investment strategy is very much focused on areas in London with the tightest supply and strong areas, sort of strong underlying investor and customer demand. And we will only buy buildings where we know that we can reposition them into best-in-class assets. So those will be very resilient. I also think that sustainability is very critical to creating a prime asset. I mean, we've seen it in our own portfolio. We've shown it already with our successful pre-let at 2 Aldermanbury Square in the city with Clifford Chance. Sustainability is very important to them, and that is one of the key reasons that they chose our building. And we also sold 50 Finsbury Square this time last year, at a 3.85% yield, which really bucked the trend. I'm pretty sure we set the market back a few months in terms of pricing readjustment because we'd sold something at such a strong price post mini budget. I mean, everything was already looking pretty volatile. And again, one of the reasons for that was because it was best in class. It was super sustainable. It was a freehold. It was on a square. It was an excellent refurb. I think if you're creating that kind of product, then you have reasons to be pretty cheerful. I think our customers are increasingly interested in how sustainable their building is, whether that's the net zero status, the energy consumption, if they're fossil fuel free, or whether they have access to nature. And they realize that sustainability is a business imperative, and so do we. And we are absolutely catering to that demand. So I think for me, offices are here to stay. Working from home, I think we're more hybrid work at the moment than working from home. And I think that people will be encouraged to come into buildings if they are in the best locations and the best type of space. And that's what we create. We're creating very sustainable buildings, and we're in central London, which is the best place to be. So I'm pretty positive.
Talk to me about WIN, Women Investment Network. Can you talk to me about why you set it up?
Yeah, absolutely. I set it up with my colleague Ella Johnson. She works at CBRE. She's a senior director in the central London investment team there. And, we've known each other for years. And she is one of the women I know who's kind of as passionate about transactions, I suppose, as I am. So we are good friends, and we've often sort of thought, okay, there are lots of women in property, but why is it that there aren't that many in what we do, in central London investment in particular, and also offices? So this has just been a question that we've been thinking about for years at this point. And there are lots of networks for women in property. But they're quite broad, and they do really well, but they are broader. So if you go to a real estate balance a networking event, for example, you'll have architects, you'll have consultants, you'll have leasing agents, investment agents, people like me, the whole range, lawyers. And we want to do something a bit more specific because we thought that there is obviously a women in property issue. We're generally speaking underrepresented, but it is particularly acute when it comes to transactions, and particularly in central London offices. So it was really to address that particular issue. So we are focused on capital markets. We are a network of agents and investors. And it's really intended to attract and retain women in this particular field where we think we are really underrepresented. And also I guess the purpose is to network, to build your relationships with other women who do exactly what you do. There's a business purpose as well. We are all in the same market. We really should be doing deals with each other, or at least knowing about the deals that the other ones are doing. And also growing people and giving role models. When I was younger, I definitely didn't know that many women in central London investment. I'm not sure I knew any. And that's not because they didn't exist. It's just because I didn't know who they were because there wasn't a focus network for it. So it was really us trying to fill a void that we saw, at least.
Why do you think there are not as many women in the investment seats as maybe other seats?
I would really like to be able to answer that question. And we debate it all the time, but I don't think we've really found the answer yet. I think it's partly, that it isn't that encouraged. There's definitely a hiring in your own image issue. Certainly, when I started, when I was at BNP, there were no women in the investment team and there weren't expected to be any, actually, at the time. I remember I spoke to HR about getting a seat there and they sort of said, well, that's like, they're all boys, actually it's, and it sort of works well that way, are you sure? And funnily enough, there wasn't a seat there. So I do think there is still a degree of that, people hire people who they went to school with or, who kind of remind them of themselves in a sort of a difficult to pin down way, but it's probably because you look quite similar and you're also a man and went to a similar school. So I do think there is a problem on the hiring side. Clearly, lack of flexibility is also a problem, at least later on when women are having children, that kind of thing. I do think that is an issue. And I think it's better post-pandemic, with people working from home some of the time, and certainly even the men as well, taking a degree of flexibility with their work when it's school drop-offs or pickups, that kind of thing. It is there. And it's easier now to manage your career in transactions and also have a home life. But traditionally that wasn't there. And I definitely have friends who were actually quite senior on the agency side and then moved after they had children to a different area because it was not supported by their firms. It wasn't made easy for them, even if they had built up a really good track record in transactions. It was sort of if you want to work from home on a Friday, no one else does that. Sort of, why should you? So for women who wanted a bit more of a balance, I think it was really challenging. And I think it's getting less so now, but people need to talk about it more.
100%. And I definitely think people are. And to your point around men being more flexible and more open-minded and picking up some of the slack, rightly so, enables a further conversation and enables ladies to kind of continue to step up and into positions where maybe they've been underrepresented before. Well,
I think if you're not the only one, like now, if I say, oh, sorry, I've got to leave at 5 today because I've got to pick up the kids from nursery. If I was the only one ever saying that, then it does put a spotlight on you. Whereas if the men are doing it too, then you're all in the same boat. And actually you're not discriminated against because, it just becomes the norm. It becomes an acceptable thing to do, and it should be.
And especially when deals are on, it doesn't matter if you have to pick up kids from nursery or school, because no doubt that you and other men, women have found themselves probably working at 8 until 1 o'clock in the morning on deals to try and close it out. So, you don't have to be at your desk from 9 to 5 to close out a deal.
Yeah, no, I totally agree. And certainly this summer, and we had 3 deals on. We did 3 deals in the space of just a few months, and there are only 2 of us in the team. So it was quite an intense period, but it's not like I didn't see my kids. I did I saw them less, probably, to be fair. But I definitely did pick them up some of the time. And it means you get to see them for an hour and a half in the evenings and then you're back to it. And that's fine. And often I think that having an hour and a half out doing something totally different means you're more focused and you see different things when you log back on later on because you haven't been so laser focused on one particular issue. You sort of almost got a little bit more headspace. You've been doing something totally different and you feel a bit more refreshed when you log back on at 8 p.m.
So for someone listening to this who wants to get involved with the Women Investment Network, how do they go about becoming part of the crew?
I'd say if you are working in central London, office, capital markets, then and you are interested in joining, then contact me or Ella and we'd be happy to have a chat. We meet someone for coffee first, make sure that what they're doing is relevant so that we can get the most out of them and so that everyone can get the most out of the network. It's better to keep it focused, but really it's a case of contacting me or Ella and then we'll start inviting you along to some of the events.
And can you just talk to me about those events? How often do you have them? Where do you have them? And you've got guest speakers that come along as well, right?
Yeah, we do. So I think we've had 5 or 6 so far. So they vary. The first one we did was September 22. So we had just a kickoff event at our building at G4's Place. And we had our head of projects, Helen Hare, who I have so much respect for. She was our speaker at the event. She has had a 30-year career in construction. So she's on the project management side. So if you think we're underrepresented in investment, we are 100% worse so in construction. There are far fewer women there. So she shared her insights, and that was really great. So that was great. It was a first event where she gave us her thoughts, on her career to date and advice to younger women starting out today, which was super helpful. And then it was just network evening after that. Then we had some Christmas lunch, which was much less formal, really, really fun, actually, this time last year, obviously. And we've had a few since then. So we had another event, and we've had some smaller dinners, just with sort of a few different people, sort of smaller groups to, if maybe a more senior group or a more mid-level group, because again, we like to keep it quite focused. And then more recently, we had Ilaria Del Beato. She's the CEO of Fraser's Property Group, and she came to speak to us at CBRE's offices. And again, she's amazing. She's super inspiring. She's had an incredibly impressive career. She's really done it all. So she came to speak to us, and we were all kind of questioning her. It was quite good because, Ella and I typically interview whoever it is. But with Ilaria, she's really encouraging questions from the whole crowd. So everyone got involved. It was great. And it made for like a very open discussion. And then more recently, we had Sam McClary, who's the editor of the Estates Gazette. She came to speak to us as well. And Knight Frank hosted that. So Ella and I are trying to get different agents and clients to also host, because frankly, CBRE and GPE don't have unlimited budgets for this initiative. We all have a diversity budget, and both companies have been really supportive, but it helps make the network more self-sustaining if others host as well. So yeah, that was hosted by Knight Frank. Kate Horton put that on. She organised it, which was great. And then we actually have one next week. So next week, Savills are hosting. Chloe Newton in their development team, she's suggested putting it on. And her really good friend from school is the CFO of Cobalt Music Group. She's called Katrin Drabble. So she is a slightly different sector, but finance obviously has this very similar problems to us. And she has managed to be a chief exec, and she has a 1-year-old, and she, again, is super impressive. So we are looking forward to hearing from her. So it's a range.
So really, if you're a lady working in central London investment, either on the principal side or advisory side,
yes,
get involved. Tap Ella or Alexa up on LinkedIn, where you can find out a little bit more about Win. So as we draw to a close, Alexa, a question that I ask everyone who comes on the podcast is, if I gave you £500 million worth of capital, who are the people, what property and which place would you look to deploy that cash?
Love this question. I've actually been asking people a really similar question in an interview recently. So it's always very revealing where people would put their money. I think if I had 500 million of equity, honestly, first of all, I would pay off my mortgage and put aside some school fees for my children. But I think after that, I would probably put about half of it in debt, which I wouldn't have said before. And I think that's just because today you can make really attractive risk-adjusted returns taking senior debt positions. So I would be picking the best office, build to rent and student housing developers in central London, and also the best regional centres, putting my money behind them and then taking a maximum 60% LTV position and letting them do all of the work. So that would be half of the cash at least. I'd probably put about a quarter in REIT shares, just because we're all trading at a pretty big discount to NAV today, and suffering just from a lot of negative energy or attention and chat from the US, and we are different to the US. Central London in particular is very different from New York. I think we've been oversold. Our reality over here is not their reality over there. So I think our shares are a good long-term bet, and obviously GPE would be my top pick for those shares. And obviously, lastly, because I'm a big believer in our GPE strategy, I'd personally be doing something quite similar. I'd be buying a mixture of Core Plus, actually, which GPE don't do, but I would be doing Core Plus and value add buildings with the potential to create those best in class offerings, always in a very focused central London location, ideally West End, although I might need more than 500 million for that.
Well, you certainly put your money where your mouth is. Is there anyone from a people perspective that you would get on the journey to help you deploy that capital?
Oh, I mean, that is a really good question. From people as in actual individuals.
Actual individuals that you've worked with, or mentors, or other individuals across the space that you admire that you would have in your investment committee or team.
Oh, my investment committee or team. I would definitely hit up my old boss, Hugh Stevens. He's a total maverick. I really enjoyed working with him. Really, really good, very long-term central London experience. He's also not someone to shy away from a disagreement. Those of people on the podcast who know him will agree with that. So he likes a challenge. So do I. He would definitely probably be my chairman.
Amazing. Well, look, anyone who's interviewing with you and you ask them a similar question will know how to maybe answer it and get an inside track. But Alexa, you've had a phenomenal background, career. You do so much for everyone in real estate investment, not just ladies. And I'm really excited to see what you and the team go on to achieve and how you take advantage of the opportunities in the central London investment market in the coming months and years ahead.
Thanks. Thank you for having me. It was really fun.
No, it was awesome. And like I said, really, really looking forward to seeing what you go and do. Thanks for listening to this week's episode of the People, Property, Place podcast. If you found it insightful, feel free to share it with a friend or colleague. Give us a rating, like, or comment. It helps tremendously. It'd be great to hear from you on LinkedIn. I'm super open-minded to recommendations of guests that we should have on the show or areas of the market we should explore further. So do drop me a message. The People, Property, Place podcast is powered by Rockborn. The team recruit leadership and future leadership hires for real estate owners, funds, investors, and developers. So if you're looking to hire top talent for your business, head over to the website www.rockborn.com, where you'll be able to find a wealth of information. Or feel free to drop me a message on LinkedIn. Have a great day wherever you are, and I look forward to catching you next time.